We finally got a green day on Friday. At the recording of this video, that was yesterday on the 7th of March 2025. The S&P 500 rose about 0.55%. And I'm sure a lot of people are saying, oh yeah, I guess the end is here. We are done with all those erratic moves that we've seen in the stock market. But I want to tell you, I think, in my opinion, there's still a long way to go in this ride that we're in. And I say ride because at the end of the day, if you're staying in this and you're invested in this for the long term, then you're likely in a ride as well, in which you don't know where things are going, especially when you have a lot of political, turmoil going on in the economy. So now in this video, I want to share with you some things that you can start doing or you can take away, because at the end of the day, we want to put ourselves in a position where we are informed and educated enough to do the right thing when we see great opportunities. And that's exactly what we're going to cover in this video. And I'll be sharing a lot of expert opinions, not my own opinion, but I say expert opinions because I'm talking about people that do this on a day-to-day. Right? I'm talking about financial advisors. I'm going to bring that information to you, and I hope that you benefit from this video. So if you do, please don't forget to drop a like on it. Now let's get back to this. Right, on Friday, March 7th, it rose around 0.52%, and just like S&P 500 as well, it ended the week in the green. Same thing with the Nasdaq index. All right, it ended with about 0.7% up for the day. And I try to look, let's say, year to date. All right, because I care about the day to day. Down 5.7 on the Nasdaq. We're slightly up, I guess, with the gain on Friday, 0.61%. On the S&P 500, year to date, we are down 1.89%. The year is not looking good already, and we made a lot of gains coming into the year. No doubt about it. As you can see from the chart, S&P 500 rose 6,118 at the high of it, and somewhere here rose to about 6,144. The issue now is, what do we do? I'm going to share some things with you in this video. This is from Market Watch. It says this stock market sell-off isn't over yet. There are 4 reasons why. Now, I'm not going to kind of go into too much details on this, but I think it is important to talk about some of those things. And the reason behind them are quite interesting. I'm going to mention the 4 points briefly. The first one being growth will continue to slow. And further explains, if I move down here, he cited the elevated treasury bond yields, the strong US dollar, slow money supply, and rising inflation. The other thing that is mentioned here, okay, is the US financial conditions are in a downtrend. This is the Bloomberg Financial Conditions Index tracks the health of the financial sector, which impacts growth. US financial conditions have been weakening all year. Weaknesses caused a 10% S&P 500 correction in 2023. And a nearly 20% decline in the so-called Magnificent Seven stocks last summer. The sharp downturn in past few weeks suggests the impact on the economy and stocks is not yet fully priced in. The other reason why they've predicted that this will likely continue, or this downtrend will continue, is this market signals more weakness ahead. And now here's the thing about the stock market. It often predicts what is likely to happen in the future. So everything gets priced in. So if there's a lot of optimism in the market, well, what happens? The market rises because they believe that something will happen or something good will happen. And if something bad is likely going to happen, then guess what? It drops. And that is something that you need to keep in mind. And that is exactly the environment we're in a situation where we don't know where things are going. Today there's going to be tariffs, tomorrow there's going to be more tariffs, and then the next day there's exemptions on certain goods. If we are going to stay in this for a long time, we need to keep some things in mind, which I'm going to share with you shortly. But the last point that was mentioned, okay, as the reason why things are not likely going to get better anytime soon is, it says here, the sentiment might not be dark enough to signal stocks are a buy. Contrarian investors like to buy when sentiment is extremely dark. Sentiment has definitely worsened, according to the American Association of Individual Investors Sentiment Survey. My rule of thumb here is that a buy signal appears when bearish investors exceed bullish investors by 10 percentage points or more for 4 weeks in a row. Now, we can always ask ourselves, like, how much can we trust some of these opinions? And that's a valid question because there's so many experts out there, right? Especially in the world of social media, everybody comes out as an expert. And the reality is that sometimes you have to take some of these things and ask yourself, does it make sense? Is it good based on your own beliefs and understanding of the market? And sometimes you have to be able to just trust yourself and trust your own understanding of where things are likely going to go. With that said, we also need to remember that last year, there were a lot of experts, so-called experts, who predicted that there was going to be a recession. 2 years ago, there were so many experts, all right, who predicted that there was going to be a recession. every year there's always that experts, so many of them believing something will happen, and most of the time it never comes to fruition. So you as an investor, you need to look at your own situation and look at where things are for you in terms of your finances, in terms of your time horizon. If you are in a situation where you have a long-term horizon, okay, I'm talking about 5 years, 10 years, then this is definitely the kind of opportunity you're looking for, because we know that the stock market eventually rises. And I'm going to share something with you here. This is another article here from MarketWatch, and it says here, stock market uncertainty can trigger panic selling. Here is a better option. Now, according to this financial planner, there are some things that he shares with his clients, and I think we can take a lot of lessons away from this. And I think I'm going to start from here. Years ago, Shotwell wrote down 4 principles that govern his investment philosophy. In chaotic times, he grounds himself with these core beliefs. You need to ask yourself these questions as well, like, how do you see these beliefs, and hope they resonate with you, and these are things that you can also keep in mind and maybe make your own beliefs as well. It says here, in the short term, markets are unpredictable. The market will move based on days, headlines, and people's emotions. And that's exactly what you need to think about. It's always about the emotions, the fear, the worries that people have, the headlines, and guess what? They intentionally make those headlines as scary as possible to drive people's emotions, because people are mostly run by emotions, not by logic. If you're one of those people who are controlled by the headlines and worry about what somebody says on the social media, and you think that will determine your future, then that's a big problem right there. So this is definitely something that you want to take away. In the short term, markets are unpredictable. The market will move based on days, headlines, and people's emotions. It's very important. The second one, the long term is positive based on economic growth, productivity, and technology. And this is something that I've always mentioned, even in my previous videos as well, that the stock market will always continue to grow. Yes, there will be crashes, there will be downturns, there will be corrections, there will be turmoil, generally speaking, within those time frames. But over time, the long term is always positive, and the long term positives outweigh the short term volatility. And that is something that you need to remember, that the economy of all these countries in the world will continue to grow, which would further influence the stock market. It is very crucial that you keep that in mind. So if you know that, then you need to remember that the short-term volatility is all noise, it's all distractions, it's all to get you out of your game and force you to sell when you're not supposed to sell, okay? It'll scare you away from buying when you are supposed to be buying. The third point, no one can accurately time the markets consistently. Build a portfolio for all seasons. Now, this is something that I think that you all need to remember, that when I talk about investing, I always say long-term investment and, have your portfolio diversified and all these things. These are the great points. But I also want you to remember that we can split the portfolio into short-term, into medium-term, and into long-term. You don't necessarily have to have one focus on your portfolio, if that makes sense. And what I mean by that is, for example, do you have a retirement account? Then that is definitely long term. So that means whatever you're putting your money into that portfolio, you're not even checking it. You're not even seeing what is going on with it. The goal is that you're putting money on a consistent basis. You're letting it do its thing. You set it on automatic and forget it. You barely check it. Maybe you only check it every 6 months, maybe every year, right? To maybe rebalance and do things like that. With the medium term, we're talking about something in the span of maybe 5 years, all right? 5 years time frame. And you're asking yourself, what is the purpose of this investment or this portfolio? So for example, if it's a brokerage account, maybe you are saving money for a down payment on a house. Maybe you're saving money for a kid's education, or maybe your education or something of that sort. You want to buy a car. It could be a reason why you started investing, because you want the market to help you propel, you speed up the process of saving. That might be something you might want to do. And if you're the type of person that is somewhat open to taking risks, then that might be something for you, where you actually put your money and hope that it grows within the time frame. And of course, in times like this, within that 5-year time frame, you might need to maybe reduce your exposure, not necessarily selling completely out of the market, but if you're within that time frame of that 5-year period, then maybe it's not a time to be 100% stocks. Maybe it might be time to put some money in high yield savings account, right? For the purpose that you've set. And if you think that this is temporary, right? It might be time for you to put in, maybe buy more, right? Buy low, right? Buy more shares of your favorite stocks that are well diversified so that you're not taking too much risk. The next one is what? Talking about risk. Risk and return are forever related. You can reduce your risk, but you also need to reduce your long-term expectations. And this is like a term that I've heard where they say scared money don't make money, something like that. And that is the truth. If you don't take risks, guess what? Your returns are also going to be lower. If you put your money in a savings account, your returns are going to be lower. If all you do is watch stock market and say it's going to be very dark, guess what? Your money is going to stay with you and inflation is going to eat it up. Unfortunately, inflation is one that isn't calculated for in your portfolio. And I wish they did, because you would see how much money you lose on a daily, weekly basis just to inflation. Okay, that 3% that we have inflation at right now, imagine it being taken away from your $10,000 portfolio or your $20,000 portfolio. You're losing money that is in a savings account. Now, temporarily in the stock market, you're definitely losing way more than that, but we also know that you have the ability to make more when things turn around. So those 4 points, which I'm going to share again on the screen right now, okay, there's 4, I guess, beliefs, are things that you need to keep in mind. Take a screenshot of it, write it down, note it down so that you can remind yourself of the things that you need to do when you're scared.